Welcome to FMH Insurecast, a podcast created by Farmers Mutual Hail designed to deliver expertise and insights from trusted FMH team members and industry experts. Each new episode will dive into new products, industry updates, and innovative solutions. Let's get to today's topic.
Hi, everybody. Dave DeCap here for another FMH Insurecast. Well, it is that time. Spring sales close is coming up on us, so like we've done in past years, we want to discuss what crop insurance options agents and farmers are really considering this year, and we're kind of getting to crunch time. February is right around the corner where discovery starts to happen, so now's a really good time for this, I think. And as all of you know, probably by now, you probably have been discussing this quite a bit, with the passing of the Big Beautiful Bill Act, or OB3, last July, many changes were made to the program. Most are in favor of producers, so that's great news, of course. But with that comes a number of decision points that agents and growers really want to make sure they consider appropriately, and that's what's going on right now. These are the kind of discussions that are being had. So as part of OB3, significant changes were made, in particular to area plans like SCO and ECO. So agents and producers are taking a hard look at how they might incorporate these into their crop insurance plan. So we'll highlight today how those are being considered across the country, along with other changes that came across as part of OB3 and just as the normal evolution of things every year in crop insurance. So really looking forward to this discussion. To do this and to make this work, today I've got three guests, expert witnesses, who can give us some perspective from various parts of the country, since those deciding factors necessarily vary geographically, right? Your South Carolina producers are going to make different decisions than North Dakota producers and so on. So those three guests are Billy Mead, Andrew Sather, and Landon Schaefer. All these guys are from our sales team, and I'll have them introduce themselves here in a sec. But guys, Billy, I'll start with you. If you could just give your name, role, background, height, serial number, all those kind of things, we'll kick it off from there, and then we'll go to the other guys. So, Billy, kick us off, would you?
Sure. So thanks. My name is Billy Mead. I'm from Central Kentucky area. I work in the eastern region of the U.S. as a sales development manager. Been with FMH about 2.5 years, been in the industry around 30 years. So appreciate the opportunity to be here. Looking forward to the discussion, Dave.
All right. Thanks, Billy. Andrew?
Yeah, my name is Andrew Sather. I'm the district sales manager for FMH in the northern region. My territory is the state of North Dakota and also the northern portions of Minnesota. In addition to FMH, I also do farm with my dad and uncle, so a lot of the same discussions and insurance strategies we'll be discussing today are the same types of considerations we're looking at my farm here over the next 6 weeks as well.
Yeah, super helpful. Thanks, Andrew. And for those of you that watched our last episode, Andrew was a participant on that as well, so we're trying to get him viral if we can. Landon, introduce yourself.
Yeah, Landon Schaefer, here in Omaha, Nebraska. Strategic account manager. So on the sales side, footprints primarily Nebraska with a few agents that spill outside of that. But I got my start with FMH back in 2008 with the associates program. And that was a different time back then when I was a territory manager. I was both sales and claims. So since then, been around for a couple changes. Got my chance of being a full-time adjuster, claims manager, and I'm here in sales now. So.
Gotcha. All right. Thanks, fellas, for joining us. I'm looking forward to this discussion. I think for listeners and viewers, we've got a pretty good chunk of the United States represented. So, and these guys are out there every day having these conversations. So looking forward to it. And thanks again for joining us, guys. In the past few podcasts, we've shared updates, OB3 updates. We've talked ECO, we've talked BFR, we've talked MCO, and any other acronym you can name. But all the new products and changes that have come down, but those are more in a kind of more of an awareness or informative kind of state. So today we're really looking to dig down and discuss how these are affecting crop insurance decisions this year. As I mentioned earlier, we're recording this at the end of January, so these conversations are really heating up. And so you guys have been in the thick of the meeting with agents and growers, through farmer meetings, general agent conversations, the spring update trainings just ended. So this is a really good time to get your take on what this year is shaping up to be. And I just want to say you're all welcome to chime in at any point, because I think this will be a really good back and forth discussion. But let's start by going region by region and see what the discussion is in the countryside. And Mr. Mead, let's start with you since I don't know about this year, given what just happened this last week or so. But Kentucky typically thaws out a little bit earlier than some of the rest of the country. I don't know if that's the case or you're expecting that, what the longer range forecast looks like, but what's going on in your neck of the woods?
We're still pretty cold right now. It's not quite thawed out back home in Kentucky. Hopefully it'll wrap up here over the next couple of weeks. We'll thaw out a little bit. And then of course we transition from winter season to pothole discovery season. So, that's something that you got to pay attention to with the roads. Same thing that we do as we looking at discovery prices, we're discovering some potholes around the area as well. So when you speak of the eastern region, the geographic diversity that you have there is really huge when you think about it. You have the Gulf Coast, you have the Carolinas along the seaboard there, you all the way up to Michigan and some of those states. So a lot of different crops, different kind of weather patterns that you'll see, and different sales closing dates. So in some of those Carolinas and Gulf states, they have a 228 sales closing. So that makes them kind of really focused in on the products, the kind of crops that they're looking at for their 228 time frame. One of the big drivers outside of the normal multi-peril crop insurance along those coastal regions is something called HIPWE. HIPWE, for those that may or may not know about it, is called Hurricane Insurance Protection with a Wind Index. So it's really that hurricane and storm insurance. I think of it as an event-driven insurance. So it's purposely designed for specific wind speeds and rainfall amounts and everything else. And you'll see that absorbs a lot of the extra dollars that people may have for buying additional coverage options. HIPWE absorbs and consumes a lot of that. So we don't see a lot of ECO, SEO policy choices in some of those coastal areas. Now, as we move up into Western Tennessee, Western Kentucky, Ohio, Illinois, Indiana, some of those states, then you're going to see a lot of those ECO, SEO discussions going on. They're typically follow patterns like the normal row crop producers here in Iowa, across the Dakotas, etc. So you'll see them follow the same kind of driving forces for the ECO, the plus products to individualize those county programs. Really focused in on the profitability that's out there in the field. When you think about what ECO does on that high band, that 95 to 86 band, farmers are and agents are really trying to produce and protect that profitability margin. They have shallow losses in Indiana and Ohio, typically 15 to 23% range. So they're using the ECO to protect that profitability margin because that's really, with the tight market out there, the low prices that we've seen, that's what they're looking to protect, that equity in the field. So a lot of discussions going on about that as we see producer meetings going on. That's a primary driver out there. That additional premium support has certainly kicked up an increase in people looking at those policies and options. And we got that additional premium support coming in from OBBA, as you had talked on previous podcasts. So a lot of excitement going on out there, a lot of increase in those discussions. That decoupling of ARC and POC also added some excitement into the mix. So a lot of things to talk to the producers about, a lot of things to bring to the table from a discussion standpoint. It's an exciting time of the year to be out there with customers, with agents, sharing a lot of the changes going on in crop insurance program. It's an exciting time, Dave.
Yeah. So you've got, so with that comes, I alluded to this in the intro. So with that comes, especially in some of your further southeast areas, you got HIPWE, you got stacks in some areas that's also available. So how are you finding that some agents and producers are having difficulty sorting through all the options, right? Like we talked about, it's generally, obviously, margins are depressed, inputs are up, all that is going on. Crop insurance is probably the only thing that is really, apples to apples year over year is potentially going down. But with that comes a lot more additional options to consider. Yeah. Are you seeing anyone kind of cracking through that and finding kind of a secret sauce, or is it very significantly?
That's a great question. And I have seen some of that analysis paralysis where they have so many programs and choices and options, they get overwhelmed by it. But I think, honestly, if they just take deep breaths, use some of the tools that we created with FMHQ, our quoting program, it from a visual standpoint can really showcase how those policies stack on top of each other, what's important from an individual production standpoint, how it relates to the county programs. It works really well together. So I encourage folks to kind of leverage those tools and that functionality to get a an increase in understanding and be able to visualize where that policy enforcement comes into play. So great question, but yeah, there's a lot of changes going on. They're trying their best to consume all of that and digest it and make the right choices. So
Yeah, for sure. So I know there's some other questions I want to ask you specifically, and I know in our conversations prior to the podcast, I know there's a lot more going on, but I think let's get Andrew and Landon in here and get some intros, and then we'll kind of go back and forth with some of these other concerns and things we're seeing. Because that was a great job, great summary of a very large region of the country. So so we're asking you guys to cover a lot. Andrew, kind of same question to you. What are you seeing up there? I know obviously there's a huge diversity of crops, particularly in the Dakotas and elsewhere, but Dakotas in particular. What are you seeing? What's kind of the highlights of the conversations that you're having right now?
Well, I would say the current market conditions are on the top of everyone's list of worries for 2026. As you mentioned, even with the abundance of crops available to plant in this area, not many of them look very good on paper right now. Part of that's input prices, part of that is some supply and demand, but all that is just making for a lot of difficult conversations at times as far as what looks good. Another concern, I guess, is always weather, which is a big variable up here in the North Country. Last year, we had a very early freeze, which was the first week of September, and that did hit some crops pretty hard, especially soybeans that just didn't develop at the end of the season like they normally would have. And then, as always, a concern in the northern regions is excess moisture in the April and May timeline. We're not as far south as Billy or Landon, and we just don't get the early growing season like a lot of territories seem to get. So when we get excess moisture, especially in those late spring, early summer months, April, May, that turns prevent plant into a real problem very fast. And one of the things that did change this year within crop insurance is the removal of the +5 prevent plant buy-up.
Right.
And that has some agency groups and some farmer groups, specifically in the Dakotas and northern Minnesota, really disappointed. And as that was a very valid insurance option for them to utilize. And now that's something that's not around for them for 2026.
Yeah, we could do a whole podcast on all the discussions around that, right?
Mm-hmm.
I mean, there is quite a bit of activity going back and forth on that decision. Same question to you that I asked Billy, as far as the different options, and I'm sure it's a little different in the North Country, but are you finding any analysis paralysis, or are folks kind of is it somewhat obvious what direction they need to kind of lean, or at least consider?
Well, I think the change to 80% premium support on SCO and ECO will have a huge impact on policies in 2026. That's definitely been a very heavy discussion topic all throughout my territory. New in 2026 in the Dakotas and states to the south, and then heading towards the east towards Billy, is a new policy called CLIP, which stands for Crop and Livestock Income Protection. CLIP kind of works like an umbrella policy that covers you individually upwards to 85% coverage, just for the crops that you want included in that CLIP package. So you don't have to enroll all your crops in this policy. You can pick and choose to some degree what crops you want covered into CLIP. So that would be something that's under consideration in some regions and some portions of my territory. But one thing to know with CLIP is that if you do take CLIP, you are ineligible for SCO, as those policies overlap, and then you can't enroll in both simultaneously.
Yeah.
Another thing that's kind of unique with North Dakota and northern Minnesota, and Dave, you kind of alluded to this, is the number of crops that are available. It's very common to see policies with 8, 10, 12, maybe more crops listed on the policy, and maybe half of those with actual planted acres under that given year. So a lot of options on the table, a lot of different ways to review things, to have policy set up to plant on your farm. When you look at SCO and ECO, specifically when you have a specialty type of crop, one thing to realize is your county expected yield for SCO and ECO may not be your truly your expected county yield, because there's not enough acres of that crop in the baseline calculations. So when situations like that occur, they aggregate counties in the surrounding areas to determine what your expected county yield would be. So it's important to note that when you look at some of those specialty type of crops, the expected county yield you'll see for SCO and ECO may not be truly representative of your county itself. It may be pulling in surrounding areas as part of that calculation.
That's a key point because that's something I bet. Well, as people dig into it, they'll find out a little bit more. But I think that's particularly this time of year is a great point to make when you're leveraging contiguous counties for that expected yield. It might be completely different and therefore cause you different than expected, and then therefore cause you to make a different risk management decision where a lot of people are thinking, well, hey, if ECO, SEO, this is a no brainer. Well, it might not necessarily be. And I know your area and Landon's too significantly impacted by that.
Yes, exactly. Yep.
All right. Thank you, sir. Let's move over to Mr. Schaefer, who I know has a lot of pivots and tons of irrigation in his area. And I know that's an area that's going to be a little bit different maybe than we've talked about. But Landon, if you could talk about kind of the conditions out there right now and the conversations and what people are focusing on.
Yeah, to echo of what some of the others have said, our big concern is what our cost of production is, right? We're really struggling out here, and finding different ways to try to cover that cost of production. And we're gonna have to get pretty creative with the stacks. But conditions out in the fields right now, we're fairly dry compared to what we normally are. So you did mention that we do have a lot of pivots here. And we're really proud of those pivots. And so we know we can raise some bushels. So probably our bigger concern for the area is not going to be so much, hey, can we generate revenue, right? We've got a lot of expense out there. Will we have some margin at the end of the day? And what kind of insurance products are we going to use to make sure that that margin is covered so we can live to farm another day? So, obviously looking at the commodity prices, trying to manage our expenses, and it's a challenge this year.
When yeah, oh, for sure. Yeah. And by the way, we definitely don't want to minimize the challenge that's out there. We're happy that crop insurance, it might be more affordable for everybody, but I mean, we're in a very difficult situation, and that's across the country. So Landon, so with you have clip available in a lot of your area as well. Are you seeing a lot of interest in talking about it and maybe potentially placing it in certain areas, or are you seeing that kind of analysis paralysis a little bit in your area as well with the ECO changes, SCO changes, ARC PLC decoupling from SCO, and you got all the other things that have kind of gone on. Do you see folks leaning one way or another, or does it really depend?
Yeah, we're really gonna have our challenges with so many options. I like to have options, and it only takes, a few weeks as we're starting to sort through those to find where we're gonna land. Clip really did incite a lot of excitement. Guys really started quoting early, taking a look at it. I think for Nebraska, where Clip really probably was designed to be a crutch to get some higher levels of coverage from some areas where that rate per hundred is too much to where they can't carry as much coverage normally. I think the challenge there is going to be we don't have enough liability on that second crop, right? We're really
Mm.
just leaning into a lot of non-irrigated corn, don't have enough soybean acres, milo acres to be at 10% of that liability in that umbrella there. So clip a little bit less discussion as time goes on. For the eastern part of the state, the energy was there as well, trying to get excited about it. I think where agents and farmers are starting to land is SCO may be a county trigger plan, but it's still more specific to a crop to trigger, payments at that county expected level, right? This last year
Yeah.
we had a lot of rust issues, yield issues on our corn that we didn't see anything like that on our soybeans. We also had an 11% price drop on our corn. On our soybeans, we only had a 3% price drop. So we're just, they were looking at it saying, we're really working ourselves out of that loss. I can manage my risk better with a county-based plan, whether that's at the SCO level or ECO level. And so if I have to take my premium and use it somewhere, I think a lot of that energy is going to stay in the county-based plans that trigger by crop rather than looking at the farm as a whole.
Yeah. Yeah, no, makes sense. And for all of you guys, we've mentioned a few times about the kind of just the apples to apples or year over year cost potentially going down, and this holds true for revenue plans and everything, right? The support or the premium discount for that has gone up a little bit too. Uh, are the conversations you having involve significant consideration to add a lot of coverage, or are folks just given the environment today, are they looking to, kind of save and say, okay, well, I think I was covered as well as I needed to be last year. It's great that I'm probably going to pay a little bit less to hopefully help with, some of the continued increase in inputs and so on. I mean, are you seeing any significant movement either way?
I've seen a lot of folks try to get that protection of equity in the field. So whatever it costs, they're looking at their input costs, and that seems to be the baseline. Let's understand your input cost first from agents, and then at the very minimum, let's get that covered, which is honestly with these prices is somewhat difficult. Andrew mentioned the reduction of the PP plus 5 option.
Yeah.
That does trigger in a little bit of a return back to the policy. It saves them around $1 on soybeans, 80 cents on corn on a policy. So I've seen people recycle that premium into the ECO products for those higher band and more frequent triggers. You mentioned, Dave, the additional subsidy for optional units and basic units across the board for the most part. Enterprise units got an additional subsidy increase at the higher levels, or premium discount increase at the higher levels. So that, in itself is going to make crop insurance a little bit more affordable this year. Factor in, again, some of this additional options to cover that 95 to 86 band with ECO. And it's about protecting all the equity in the field, the investment that they have out there that they can bring to the table. Because in a year like this, a lot of folks are needing that. The banks are wanting that as well.
Yeah.
So it's something that they're really trying to reach to those higher bands of coverage just to protect their input cost.
Yeah.
Yeah, Dave, maybe to follow up a little bit on this additional premium support, what kind of savings we're seeing here in the field. Just looking at a county here in Nebraska, apples to apples, 26 to 25, if we're trying to maximize our premium support from an underlying coverage level of enterprise units at 75% coverage level with SCO and ECO, in 25, that producer may pay $30 an acre for that stack of coverage. In 2026, that same farmer will pay only $19, right? So insurance is going to cost less, right?
Yeah.
And then if we carry on just a little bit further with the BFR, if we're that first year beginning farmer and rancher and we've got 15 additional points, that producer there is really only having to pay 5% of that premium. And so that same producer, if dad was paying 30, now he's only paying 20, $19, $20, his son that could be a beginning farmer and rancher would only be paying $4 or $5 an acre. So it really gives those guys an opportunity to say, you know what, it's a tough environment to get started in, but this gives me, a little extra relief.
Yeah, that's a great point. I was going to bring up BFR, VFR as well, because that was a significant change, and it's sorely needed for folks in that situation because they don't have a lot of equity built up, and it's just a way to bridge a gap for them and allow them to farm into the next year. So I'm glad that conversation is going on out there.
I'd say let's also kind of focus in on some of these FSA programs, these county programs, because as part of OBBA, you have the decoupling or that breaking of ARC and PLC and SEO. So that gives them opportunities to cover some of those middle sections of the policy. So I've seen some folks kind of say, okay, well, I'm going to leave a little bit of a gap in the underlying multi-peril. I'll use ECO to kind of cover, or maybe ECO combination of SEO to cover the midsection, or maybe I'll leave that gap and choose that county ARC or PLC program to cover that midsection. Just leave that open on the multi-peril side, but cover it with some of the FSA programs, because the decoupling of this year is somewhat of a once in a lifetime opportunity to take advantage of that. So
The other part with the FSA programs, the updated reference prices, that definitely will help here for 2026. The increased floor with PLC, the increase of those reference prices, and then how those factor into ARC as well. Just providing a higher safety net for 2026, and then also the ability to have the higher of the payments, ARC or PLC, for that 2025 crop year.
25.
So that was also a very nice change that was made.
Yeah. And maybe to give SCO just a little bit of of a blurb here because we spend a lot of time talking about ECO. Since we are decoupled, a lot of producers really still could turn and look at SCO as well. Knowing it's lower trigger, 86% coverage level. But as we move to these Western states and these guys aren't as high of a level of revenue coverage, with their underlying policy maybe only at 70%, there is a little bit of I guess a lack in safety net from ARC and PLC because of base acres, right?
Mhm.
If a
Yeah.
producer doesn't really like how those base acres that he has at FSA are represented, granted they are being, reallocated here this year, but it still may not represent what I'm going to do on my farm today. I can get some real revenue protection from SCO on a wide band of coverage for a real bargain, right? And as we move to the western parts of Nebraska, maybe Kansas, into Colorado, when we get yield losses, they are deep, right?
Yeah.
So SCO becomes a real player out there just as much as ECO because we raise a great crop or we don't raise a crop at all a lot of times in those areas, and we can get a lot of revenue protection on that county-based trigger from SCO for a really great price. So maybe want to give a little pitch there to make sure that let's not forget about SCO.
Right. Yeah. Don't lose it in the conversation. You talk about ARC PLC and decoupling SCO from ARC decisions and the change in reference price that Andrew mentioned. Are you seeing are you seeing a change where, maybe, and this is of course isn't everywhere, the ARC county decision versus and leaving PLC, but are you seeing that a fundamental change given the reference price changes that folks are maybe leaning one way or the other, or is it still a very localized county by county decision depending on what your personal farm does?
Yeah, there's going to be some discussions both directions, both with ARC and also with PLC. Depending on your county, what that historic county yield is and how that factors into the ARC calculations and what your benchmark guarantee and what benchmark revenue is under ARC. So some discussions will lead towards ARC, some will lead to PLC, but as the others have pointed out, now at least we have the ability to take ARC and also take SCO simultaneously and not have that split up into an either or discussion.
Yeah, for 25, right?
And Dave,
Yeah.
one thing I think is important to note this year that came out from RMA just last week, well, actually USDA last week. When does a producer have to go decide those county-based programs this year in 26? They usually kind of follow some of the crop reporting dates, but this year it got pushed back all the way till after production reporting, after harvest of that crop for this year. Then they can go back, look and evaluate which one of those programs will give them the best bang for the dollar. Not that they're paying anything for some of those
Right.
county FSA
Right.
programs, but which them rewards them the best. And then they can choose that because they've delayed the sign up and registration for those programs this year significantly. So not that it's adverse election, but this is one year where they're going to be able to, kind of know what they produce and then go back and elect those choices after the fact. So
Yeah.
a unique opportunity this year.
Yeah.
And it's
Yep,
been,
great
yeah, with
point.
the new reference prices that have been set there through OB3. I mean, we're talking real dollars.
Yeah.
Don't quote me exactly here on this, but back in July before OB3 was released, we were looking at estimated payments coming from PLC on corn base acres in Nebraska. Oh boy, probably, 30, 40 million. Now with this increase in our reference prices, now we're looking at 117 million. All right. So there's some real dollars that are going to start flowing out of some of these decisions and additions that were made back in July.
Interesting year.
Yeah. Oh, no kidding, right? No kidding. In more ways than one, for sure. So, kind of rounding out that part of the discussion, anything else kind of poking its head out that are like conversation points or major concerns
So-
that are being addressed? That anything like that from your guys' regions?
So I've seen a lot of folks in, Kentucky, Ohio, Indiana look at some of this additional premium support and premium discount coming in the ECO and SEO bands, right? And because, last year, those, let's take ECO, for example. It was 44% in previous years, premium subsidized or premium discount. Last year it went to 65%, discount support, premium support. This year it's going to 80%. So we saw about a 250, 260% increase in adoption of ECO policies because of that additional premium support last year. That's probably going to have the same effect this year with that additional 15% in premium support.
Yeah.
So I've seen folks saying, oh, I want to leverage that, take advantage of that. So I'm going to drop my underlying MPCI coverage 5 points, from an 80 to a 75. The caveat to that is, what does that do for your PP? We've already seen a reduction in prevent plant, the PP plus 5 stuff that lowers the PP in the APH database that they didn't qualify for. And PP is that's an important factor for Southern Illinois, Indiana, Western Kentucky, and some of those areas. So, when you make those adjustments to the policy to the levels of crop insurance, remember it has some additional adverse effects on some of what I call the ancillary options on the policy. So certainly be cognizant of those decisions. It's great to take advantage and leverage some of that additional premium discount on the ECO, SEO products. But to me, nothing beats a strong underlying MPCI policy and all the things that it brings to the table.
Excellent point. Thanks for bringing that up, Billy. That's a really good point for people to consider.
Yeah, Nebraska, we can't not talk about crop hail and wind. So, we're talking about all these
right where I was
stacks of
going
coverage.
next. Yes,
Yeah,
sir.
we're talking about all these stacks of coverage from our RP to our SCO, our ECO, our clips. And maybe we'll even get into ECO plus a little bit here, but with Nebraska, I think I'll run with the crop hail and the wind. It seems like even on one of those years where we feel like we've really dodged the bullet and not had a lot of hail or wind events early in the season, like this last year, we got nailed by wind late season. So Nebraska's it's a tough state for hail and wind. From the company's perspective, definitely from the farmer when he's in the combine and he's harvesting that crop that wasn't what he expected because of those perils. So we're out there, and depending on area, we're trying to find that sweet spot, because we're feeling that premium fatigue after we've bought all these other products to protect us from all of our act of God perils, our price drop. So we're buying these named perils to get our hail and wind. And luckily we have a number of deductibles so we can, try to find where our risk is or where we want to absorb some of that loss ourselves, or if we want paid from percent one. But there's a lot of real dollars that we're tying up here in Nebraska trying to get that full stack of coverage for all of our perils that we have out here in the field.
Yeah. Yeah, and I'm glad you brought up basically private supplemental products to the MP, because we haven't even touched on that yet. We've got all these other options and changes and evolution of the federal program. But so Landon, thanks for that, and I think maybe let's go to Andrew and Billy to talk a little bit about the impact or the consideration. Where do the private products, the ECO plus, SCO plus, which are our private products that are supplemental to ECO and SCO, but also just your standard hail, wind. How are those things being considered in the mix?
Well, I think specifically related to SCO and ECO, I think the starting point is understanding what that expected county yield is for your crop in your county. And we kind of touched on that earlier. But more importantly than that is also realizing how you trend along with that county's production, both in up years and down years. If I, as a farmer, as my farm, if I kind of follow closely along to what my county produces, then maybe those area-based plans are a good fit for me because I know my losses could be covered with those plans. But if my land is more variable for whatever reason and my losses aren't covered appropriately by what the county does, then maybe I need to look at an SCO plus or an ECO plus so that my own individual losses can be accounted for.
Great point, Andrew. I'll just to add to that, it brings something else to the table with those plus products that I hadn't at least heard mentioned yet, is optional units. Yes. Most of the policies that a lot of producers seem to have are enterprise units, but the plus products, they individualize that to kind of the yields and whatnot of the individual producer, but they do it at an optional unit level. So it gives you some individualized field protection, because most of the policies that I see in our area are where they qualify for enterprise units, but they're looking for something that can protect them, especially if they're geographically diverse. If their farming operation is spread out, maybe it's across different sections of the county. they're looking at how can they get some optional unit, coverage without paying that optional unit premium. Well, some of the plus products allow for that. So it's fairly unique. And I gotta throw my gratitude in for FMH and the FMHQ application because, it's one of the few tools out there that I've seen that allows agents and producers to sit down and custom tailor a suit. I think of it as you get these options, these suite of products. It's like a store-bought suit. You can get coverage, you can, have things protected, but you can really tailor something specific to that grower and that individual. You can use the historical look back to see if that would work out for that person. Had they had those options over the past 10 years, 5 years, etc. It gives you the power of looking at all of those what if scenarios in a tool that's really intuitive and easy to use. So, to the folks that had their hands in creating that, that's just a fantastic tool that I think is industry unique. It's a great asset to FMH agents. So
Yeah, and I think quoting is the most important thing we do, right? As an agent, that's where the standard gets set for what we can expect for this year. So I like to, if at all possible, make sure we're quoting with planting intentions. I mean, the farmers have bought their seed, they bought their fertilizer, they know where they're planting, right? And we've talked about all these discount factors and extra premium support. You can't really calculate those true cost of productions or cost of insurance without knowing exactly where you're going to plant and how many acres of each crop, to see what kind of discount factor you get on your enterprise units. And when that farmer has that in his hand and he has those specific coverages in place, he can take that to his lender, right? And
Yep.
say, here's the borrowing power I have. And if it's not, he can come back. If it's not enough, he can come back to his agent and they can adjust some numbers, right?
Yeah,
But
tweak it.
we have to know what acres we're planting on what units because they all have different APHs to know how many bushels we're going to be guaranteed on that farm. Because many producers right now are also out there meeting with their grain broker, their grain merchandiser, and they're making a marketing plan. And they need to know how many bushels they're going to be guaranteed so that when they get to certain strike prices or dates on the calendar where they're targeting to sell, they can make those decisions soundly. So FMHQ does a lot of that for us, and that agent can take those planted acres or intended acres, and they can just push that to the policy. So not only can FMHQ kick out of a lot of information for us to make our best decisions going forward, but it's the start into just setting our policy up and saving a lot of extra legwork when we get into our busy acreage reporting season as well. So, really use that submit to policy function.
Yes, sir. Andrew, anything to add to that before we
Well,
move on?
Landy, you kind of touched on this a little bit by tying in the banker standpoint and the marketing standpoint. And we've talked a lot about ECO, but as a farmer's perspective, I like to look at ECO maybe a little bit differently. And that's to look at that product, that tool, and look at that as a hedge risk, as a way for me to hedge the price risk that I have on my farm. If I were to take the amount of bushels that I can take with ECO coverage this year and hedge that on a commodity market with futures or options, it would come at a lot higher cost to me than what ECO allows me to do. So I like to take that ECO cost, the amount of bushels that is provided, the price that I'm covering, and build that into my marketing plan and kind of help base that around my marketing decisions for that crop year.
Yeah, very good. Thanks for that. That perspective is excellent, and it is a great way to think about it from a farmer perspective. So that helps round out the discussion quite a bit. So thank you. Okay, so we're about we've talked a little bit about, well, just about everything that's a part of the conversation here. So I just want to open up the floor and see if you guys have any closing thoughts, anything we didn't touch on, anything at all as far as the crop insurance spring sales season.
Well, maybe one that's close to your heart, Dave, is precision. So
That's my guy. Good job.
as we're adding all this coverage, right, we're going to have more liability out there. So we're all talking about this 95% coverage. When we start having some of those losses, those dollars are going to add up quickly. So we're going to get into positions where we may have to have more high dollar reviews because our losses
Reviews.
are over
Absolutely.
$200,000 per crop per county. And the quickest and easiest, least painful way to complete those reviews is if we are fully automated, um, doing precision crop insurance with our planting acres, as well as with our production. So maybe to just get a little plug in there for precision. It's a great time to meet with your precision tech specialists that we have regionally, across the footprint. Get with some of those new farmers, meet with your past farmers that are doing precision already. Get if in irrigated country, we got to know our boundaries for our pivot so we can separate that non-irrigated production from our irrigated production. So something to think about as we're adding more liability out there.
You bet. That's a great point, and you're absolutely right. That is, and our precision tech specialists, our sales managers. There's a number of folks out there. So if you're an agent listening or watching, just reach out. There's a wealth of material, and training, conversation out there available to go further down that path. So thanks, Landon. Anything else, guys?
A couple things, and this is something that's been mentioned already before, but knowing your cost of production as a producer and knowing what your break-even price is such a key component. I mean, that really drives your insurance purchasing decision, and that's really the baseline of understanding where your risks lie. So getting that tuned in as best you can is very important. Secondly, and this is another thing we kind of touched on and off here today, is insurance, crop insurance. There's a lot of different strategies, a lot of different decisions to make. Sometimes I even joke with my agents that crop insurance only becomes more and more complicated every single year. It doesn't become easier, it doesn't become simpler. We got more acronyms, more options, different rules, updated prices. Crop insurance isn't static, it's always changing. So when looking at your own crop insurance policy, don't just set it and forget it. The same policy you had in 2025, 24, 23, that may not be the best policy for you for 2026. So keep an open mind to new products, new ideas, new recommendations from your agent. Just because what you've done in prior years, you may be missing out on something in the future if you just keep it the same.
And Dave, I guess last thing I'll say is, as agents are going out and meeting with their producers, sometimes they'll bring them together for a dinner, for a breakfast, and do larger producer meetings. Don't be afraid to reach out to your FMH field, sales managers, your training team, anyone at FMH. We're happy to be there to showcase some of these changes, to kind of go over and model, hey, how does these policies look inside of FMHQ for, your range of growers? We're happy to work with agents across the country, assisting in producer meetings to, again, showcase all of these changes, the impacts to the policy, and how FMH can deliver unique, custom tailored coverage and options that deliver, the best options for producers out there. So,
yeah, well said. Well said. So if, barring any further comment from you guys, I think my next question would normally be call to action. Where should people go? But I think the last few minutes, you talk about FMHQ, you talk about reaching out to your sales manager, your precision tech specialist, your trainer, particularly for agents that are listening. I think there's a lot of opportunity for further discussion along here. And I think the conversation you guys have brought to the table is really going to open up some perspectives. I think it was a great conversation, and I really, really appreciate you guys taking some time to get on the call on the video to discuss this on our latest crop insurance decisions Insurecast, because boy, aren't there some decisions to be made. So let me just thank each of you. I really appreciate it. I want to really thank all the listeners and viewers out there. We hope you found this information helpful. Reach out if you have additional questions. We'd certainly be more than happy to accommodate and dig as deep into the weeds as you'd like. And please, everybody, join us for future episodes of FMH Insurecast. We'll be here, but that's all for this time. Thanks, everybody.
You've been listening to FMH Insurecast. We appreciate you joining us today and would like to hear from you. If you have questions about today's topic or an idea to share for an upcoming podcast, you can contact us at fmhpodcast@fmh.com. Thanks for listening. This podcast is intended for information purposes only. See policy provisions, terms, and conditions for details. Products underwritten by Farmers Mutual Hail Insurance Company of Iowa and its affiliates, West Des Moines, Iowa. Farmers Mutual Hail is an equal opportunity provider.